Hey guys, what is up? Kevin Cage back with another daily cryptocurrency video. Welcome to the channel. Like and subscribe if you like what you see, and let's get right into the information today. I wanted to start things off with this cool little graphic that many have seen. It's by Johnny Lawrence on Twitter. Definitely check this guy out. His artwork, his infographics, and these actual live visuals are amazing. So this is demonstrating, for those of you that don't know regarding XRP, the Nostro and Vostro accounts, essentially pre-funded accounts that banks have to hold due to the current corresponding banking network. And what XRP would be is this bridge asset between fiat. So it is not just merely a fiat converter per se, is what I've heard some people say, but it truly is an agnostic bridge asset on a level playing field, so that all of these banks, all of in the correspondent banking system, can transfer value instantaneously, and this will free up trillions upon trillions of dollars that is sitting idle. They refer to this as dormant capital because it's tied up in different banks throughout different countries. Now, what happens is banks, one, we're going to free up that capital, no longer suffer from as much inflation, not as much capital costs. And when the trillions of dollars, by the way, trillions, 12 zeros, is free, they can then create other revenue streams. We can, reinvest it to get additional revenue streams and actually let money work for you. It really is truly incentivizing banks to take action and do some form of this. And again, XRP is true ODL, and you're going to see that acronym more and more, on-demand liquidity. Now, in every financial crash, whether it's 2008 or the one that is pending and getting more likely by the day, liquidity is one of the primary drivers. All right? So let's kind of go over a few things, and basically this is high level and some of my speculation and some facts as well about why I think XRP is going to be very, very relevant in the near future. So right here, quantitative easing. So again, the Fed, they are literally just printing and printing billions upon billions of dollars, at least $75 billion per day. Many times so far, it's been well over $100 billion indeterminately. They're saying that they could stop on October 10th, but they're going to kind of reevaluate. It's my prediction that whether they stop on October 10th or not, what are they going to do? What's going to happen when they do decide to stop? This is not sustainable. This market is going to go nuclear. And I'm actually wanting to put that in the video title, something regarding nuclear. I did watch a video update today with Greg Manarino, the Robin Hood of Wall Street. He had some great points, and I agree with a lot of his sentiments, so highly recommend you check that out. So right here, we got the Fed, quantitative easing, European Central Bank, Bank of England, Bank of Japan, Denmark, Australia, Brazil, Russia, India, China, Hong Kong, Korea, Indonesia, South Africa, Turkey, Mexico, Philippines, Thailand. You have all of these groups either, doing some form of QE, along with negative interest rates are coming. If not, they're already here in some places. That is insane. If true negative interest rates, and obviously in the US, Trump has already been addressing this, when people have to pay negative 1% or 2% to have your money, thousands of dollars sitting in the bank, people are going to be pulling that capital out, looking for additional safe havens. It's my belief that not only with, of course, precious metals, when I'm talking precious metals, I think silver is a sleeping giant, gold, and then platinum. I have my eye on it. Now, this is not financial advice. I want you guys to all do your own research. If I'm wrong, tell me why I'm full of crap. But it's my belief as well that digital assets, yes, cryptocurrency, will be a key safe haven in the economic future for a lot of reasons, because you're truly going to own it. It's versatile. You can travel with it. When you own your private keys that allow you to access your cryptocurrency wallet, nobody can take that from you, especially cold storage. And again, regarding cold storage, if you guys need to store your cryptocurrencies, do not put them on an exchange long term. I recommend a cold storage wallet. I have Ledger Nano S's, Ledger Nano X's. The links are in the description. If you don't want to use those links, use your own. But highly recommend you look into that. So, all right, so we're talking about QE. Now, some of you might be saying, okay, well, what is QE? And here's a high-level overview. So, quantitative easing, explain definition, risks, and effects on the economy. So, QE essentially, and I'm going to try to dumb it down a little bit, but the Federal Reserve prints money to finance the purchase of government treasuries from FIs in an effort to pour extra money into the economy. Now, this is a monetary policy. They think it'll help. Now, there's a few potential benefits, but there's a lot more risks the longer you do it. So the idea is that these financial institutions will in turn be more willing to lend out money at lower rates. Now, essentially lately, at least in the past year or two, rates have been very, very low in terms of interest rates. It's free money to start businesses. They want to incentivize people. And at this point, now it's even more free money for some people. It is negative interest rates. That is insane. But again, this is going to impact the lower and middle class. So it's helping the central banks achieve and maintain low interest rates. In addition, QE can fuel keyword, economic growth, since money funneled into the economy should allow people to more comfortably make purchases. This can have a trickle-down effect on both the consumer and business communities, leading to increased stock market performance and GDP growth. Now, it's my belief that at this point, by October 10th, it's going to be well over $1 trillion pumped into the economy. In 2008, it was over $500 billion. We're going to be surpassing that. And that is right before the massive crash. What do you guys think could potentially happen? Obviously, a recession is near, very short term from now. I believe in the next 6 months. Now, if it's not, it could potentially be a depression. I'm not sure. Now, all right, so right here, QE generally leads to short-term benefits with the risk of exacerbating long-term problems. And that is my sentiment. The longer we're doing this, we cannot delay the inevitable. And I believe that the powers that be, are just stalling, per se. So let's see why the Fed uses QE in the first place. Fosters maximum employment, encourages lending, with lower rates, encourages borrowing, increases spending, ideally with more money out there, and complements low interest rates. Now, here's the risks, and the longer we do it, the bigger of a risk it becomes. It drives inflation much higher. The US dollar is losing value. We're going to be looking for safe havens. It creates havoc with international trade. Well, what can resolve that? XRP, in terms of international and cross-border transfers. It threatens the US dollar, absolutely, along with other currencies, and basically the global economy as a whole. Encourages debt, like we don't have enough of that in the world. And then benefits don't outlast QE programs. So I just wanted to go over that. There's a lot of speculation. I think this is a well-written article, short and to the point. Now, I don't want to bore you, but I do want to cover one last thing with QE. So right here, Cryptopolis. So remember a few days ago, I shared a video about, retail closing, and it was Cryptopolis' tweet. Now, right here he goes, we discussed the issue of retail closing on the cash flow and reserve requirements of banks. Now this, European Union and Asia first. US closures are next. Do you seriously think the Fed will be able to stop injecting liquidity into the repo market on October 10th? Not likely. Now they're stalling, and as you can see here, Forever 21 files for bankruptcy. Another one bites the dust. All right, now I want to talk about some XRP stuff with Ripple and their development. So, for those of you that don't know, I want to talk, So, Marjan Delantine, we already know she worked for Ripple for 10 years at least. You can check her LinkedIn. She was selling the Swift GPI product. She left 2 years ago. She's now head of banking for Ripple. She wants to work with True Innovation, and this is where she sees the future going, obviously. And right here, I just want to go over this really quick. She's basically just talking about volatility and people's concerns, saying that when you transfer money over a digital asset, since cryptocurrency is so volatile, that goofy catch-all term that everybody puts into it, that it's very risky and banks are afraid of it. But in reality, the truth is this. When you are sending a payment, XRP, you have a fiat US dollar, you transfer it to XRP and send it and it takes 3 to 5 seconds to send. It is only as a digital asset XRP for 3 to 5 seconds before it transfers back to whatever corridor or fiat pair you're in. Say it's the euro, the Singapore dollar, the rupiah, it doesn't matter. That's 3 to 5 seconds of volatility. Now, there's different types of volatility, and I'll go over it, but essentially, it's going to be actually less volatile than the current infrastructure today. When you're sending money through the correspondent banking infrastructure using Swift, when you actually settle, Swift isn't even capable to do it. They can only do payments. When they do settlement, they use a correspondent banking network. And what happens is this money travels for 3 to 5 days. Now, there's volatility and inflation on both currencies, right? Both fiats. And you're basically taking a risk, 3 to 5 days. Good luck. Again, they're prone to a 6% error rate. I say this in every video, but this is for any newcomers. Hopefully, please don't look like I'm talking down to you guys. I'm just trying to explain high level for anybody because there's a lot of new people that watch these videos. Now, it's subject to the foreign exchange market. It takes a long time. And at the end of the day, 3 to 5 seconds of exposure doesn't really matter. It doesn't really make a difference. Now, there's two types of volatility, or there's two types of slippage. There's volatility slippage and there's consumption slippage. Now, volatility slippage, hypothetically, will zero out. 50% of the time, it'll go up in, the liquidity provider or market maker's favor. and the other 50% of the time it won't. So essentially there's a net zero effect. And everybody acts like this is a huge concern, but banks are aware of this. They're adopting CBDC, central bank digital currencies. They want to create their own walled, closed, permissioned private ecosystem. But to communicate with other groups, they still need an agnostic bridge asset, such as XRP. Now, a lot of people can wish and say, yeah, well, Bitcoin is truly decentralized, and this will be the perfect asset to do it. Again, proof of work, their consensus mechanism is not effective, and this has been proven a long time ago. It's well known that Bitcoin is arguably significantly more centralized than XRP. Will it survive? I have no idea. But it's my belief, and I'm just following the big money, that XRP will be the one and has been for a very long time, thanks to proof of consensus, thanks to its validator model. The XRP ledger is far superior and positioned to actually help any product, service, value, merge ledgers with ILP succeed. And then XRP is positioning itself as already the best, most scalable, most secure, and fastest asset. And if they don't win, they don't deserve to, period. I really like those odds. And just with some FUD before I continue, you can spread FUD online. You can, write negative comments on YouTube. You can retweet on Twitter. It doesn't matter. That's what people want. I personally know XRP is not a security. Ripple shared this, Ripple, the private company, has shared the stage with the BIS, the Bank of International Settlements, the International Monetary Fund, numerous times. They met with the Trump administration. Like, this is the typical FUD, fear, uncertainty, and doubt that we've been hearing for years and years and years. Even the digital asset investor who invested years ago into XRP said, we've never heard more positive news. And I agree with him. I agree with that sentiment. Now, this is going to continue to increase until we really pop off. XRP is not a security. It's going to be some new fancy classification, whether it's a commodity or a utility in exchange token, which is what some countries have already classified it, or even the FCA has classified XRP as. This is the type of market fear and spreading of fear by media. This is nothing new in the investment space. It might be scary because it's cryptocurrency. There's not a lot of regulation attached to it yet, but this is what happens when you invest into a nascent market. Now, again, this is why I'm so bullish. I'll probably say this in another video if I'm rambling, but owning these digital assets, these cryptocurrencies, allows you to own a piece of the protocol and potentially profit off of the asset you hold, because it will be valued, in my opinion, based off of utility. Utility is going to drive the price long-term of these assets. Now, an analogy I want to use is imagining owning a piece of the internet back in the 90s, before the entire world was connected to it and built upon it. The internet is essentially just a network of networks. It's creating connectivity for information and data. Blockchain, however, obviously it's a massive database, a ledger essentially, with interoperability protocols, with cryptocurrency to transfer the value, atomic swap technology, smart contracts. This will all contribute to the internet of value, not just the internet of information. Now, it's true connectivity and interoperability for value. And when I say value, I mean all kinds of value. Whatever a person decides has value or intrinsic value or whatever, it's just a social construct. Whether it's stocks, securities, they decide to tokenize real estate, they can tokenize or digitize precious metals, they can do options, forwards, futures, anything in the derivatives market, cryptocurrency, index funds, mutual funds, you name it. This is the future. And again, as I've already said, you're going to be owning these assets. All right, so now let me talk really quick. I do want to go over this. Let's go over this tweet really quick. So XRP Neo, or XRP_Anderson, always love his stuff. Each new use case for XRP will increase the liquidity of XRP, reducing the spread on these order books and exchanges and lower the volatility. Now, it really doesn't even have much volatility, but eventually the higher the price, the lower the volatility will be. And hopefully you guys understand these terms. If not, just ask and I'll try to answer them in the comments. But a network effect will be created. Just think of a snowball. It's getting bigger and bigger as it rolls down the hill. The dominoes are falling. And when XRP becomes known in the world, and keep in mind this is speculation, other businesses will start building businesses on top of XRP, on top of the XRP ledger. Now, fiat replacement coins will not work. Remember, stable coins, you can call them stable coins, but they're pegged to fiat. Fiat is not backed by anything. They should be called pegged coins. They can't be stable. If we're doing quantitative easing and the US dollar finally does crash eventually, why would you call that coin stable? I wouldn't. All right. Now, essentially, let's see. So the higher the liquidity, the lower the volatility. The lower the liquidity, the less volume and money that's moving in, the higher the volatility. It's easier to manipulate the pricing. When the price is low and the market cap is low, a giant buy order can totally change the price and manipulate it. But when there's billions and trillions of dollars moving through XRP, it's a lot harder to actually manipulate the price. And that means there's less volatility, less subject to change. All right. Right here. Now, this is a blog by Galgatron, galgatron.net, and he's just talking about slippage. This is all like cryptocurrency blogs for beginners, and I want to cover these two types of slippage for anyone in the XRP community that actually wants to understand this. If you're just wanting me to tell you XRP is going to be $1,000 overnight, sure, like the video. But I actually want to teach you guys something, and I want the XRP community to be well informed and teach me something too, because I'm always learning. So, the volatility definition, where time passing introduces variability into a trade. For example, if I want to send money from Mexico to India using XRapid, so I'd like to know, and again, the currencies, Mexico, Mexican peso, India, we're going to say the India or the Indian rupiah. I'd like to know before I pull the trigger what's the cost or what the cost is going to be. I'm given some quotes by the liquidity provider and hit the send button. A few minutes later, the transaction completes, but unfortunately, the LP, the price of the rupiah moved ever so slightly up, costing the LP a lot more money than was charged up front to me. And this is volatility slippage, meaning that things changed over time in terms of the foreign exchange rates of these fiat currencies after I already agreed on the price. So volatility slippage is a known risk for these liquidity providers, that some of the transactions are going to cost more than they're quoted. And as I've said earlier, but keep in mind, statistically speaking, it's just as likely that the next trade, any currency fluctuations, might work in their favor, making it more profitable for them. Over time, thousands and thousands of transactions, ideally millions and billions, because XRP can scale well, the losses and the wins zero out. There's a net zero effect, as I've been saying. So which it means it doesn't cost them anything, which is why they are perfectly willing to take the hit once in a while, knowing they'll get just as many wins in other trades. This is also what Ripple is referring to when they say the market makers will absorb any volatility slippage losses, which ultimately is no loss at all. And again, guys, whether Galgatron, whether, Brad Garlinghouse, even David Schwartz just explaining how XRapid itself works, they've said it doesn't always make sense to use XRapid, at least initially, because if the price of XRP is too low, then the slippage will not make XRapid, which is the software product, cost effective. And the banks will revert to either XCurrent, if both banks are using it, or they're forced to fall back to Swift. And obviously, they don't want to use Swift for payments anymore. Again, that's why Swift GPI is great, but it's my belief and a lot of people's belief that's why they are expanding the ecosystem. And as you know, they've actually gotten rid of really the terms. You can still look up XCurrent, XVIA, XRapid and understand the software products, but really they're calling all of this RippleNet now an on-demand liquidity solution. They're basically just trying to put XRP as really the center of it, and that's their plan all along. They said get a bunch of banks as clients, get a bunch of them using XCurrent, get used to the user interface, get used to the service, understand the value they provide, and then, save them 40 to 60% or whatever that actual rate is, 30 to 50%. But then XRapid, obviously, when it has the liquidity necessary, it will be by far the cheapest solution and most effective and fastest solution for settlement period, and that'll save you 40 to 70%. And as XRP Neo even goes on to say, the more liquidity in the system, even with Coil, R3 potentially, even SBI, all these people that are really building on the XRP ledger, even the good news with Logos Network adopting and developing derivatives, forwards, options on the XRP ledger. This is great because this creates demand, and building on the XRP ledger creates demand for XRP, which builds the liquidity. The network effects are happening in front of our eyes. Everybody's looking at price saying, oh, for 2 years we've seen nothing but, stagnant pricing. What does that mean? In my opinion, that means that is the worst time to sell or give up entirely. This is the best time to just accumulate. And obviously, that is just my philosophy after really doing research, digging in the past few years, and seeing that bull run and actually holding and just understanding how fast things can move. And that was pure speculation. And a lot of people say, oh, that's not going to happen again. They say that every time there's a bull run. This market works in cycles. That's why you do have to pay attention to cycle analysis to an extent, but it's almost hard because you have to look at the big picture. There's so many variables. You cannot just say that this is the answer because nobody knows. whether it's technical analysis, cycle analysis, or just true fundamentals. There's so much going on. It's really just, overall the mass consensus can change instantly. Media manipulates it, social media, you and me, retail investors, news. It really is insane just to see how this space evolves, and that's human society on a deeper level. How all of this and evolution takes place, where our social constructs and the economies that we create, these marketplaces, they're all social constructs, and it's, beyond interesting. But anyways, that was a weird little ramble. So right here, I want to finish off with Bank XRP, guys. Turn your post notifications on for this. He always uploads some great content. This is actually American Express doing a demo, and it's a Ripple implementation with them. And they're working with, we already know, there's all kinds of POCs for banks, as I've talked about in my last video. And they're literally just talking about the interface. Now, keep in mind, this is X-Current, so cool your jets. But again, this is the nice payment interface. In my opinion, much better than Swift GPI. Swift GPI is just trying to catch up, but it's really well done. It's a beautiful, beautiful demo, short and sweet, showing the exchange rate they produce. It expires in less than 2 minutes. They can agree. And this is what I was talking about, the volatility slippage that the LPs or the market makers take. It's all connected. So again, guys, I am so goofish. When? I can't tell you. If anybody tells you when or they give you a date, they don't know. All right, I get excited, and I'm sorry if I, goof around and make some predictions, but nobody knows when. All I'm saying is that 25 cents is undervalued by orders of magnitude. I don't know a specific price, but I'm saying if we see the adoption that we believe we're seeing, when there's regulations coming, when people really start utilizing XRapid in the masses and hoarding massive amounts of XRP, when there's more demand on the XRP ledger to build, I know we just hired another 15 full-time engineers to be developing on that. There is big things ahead. We are just getting started. Remember, when I say it's a deflationary asset versus the US dollar, you cannot mint more of them, period. You can't. There's a finite amount of XRP. There's a finite amount of Bitcoin. Digital assets have intrinsic value. There's utility behind them, arguably more than gold. And I know people say gold and the properties have a lot of value, but we're in a digital world now, people. Let's pay attention to the trends because they are our friends. Let me know your thoughts down below, guys. Like, share this video. I appreciate it. And please subscribe if you haven't already. And I'll see you in the next one.